Hello, everybody. Thank you again for joining us today. Today is our next episode, Learning from Expert, and today we're going to talk about how is the market. Again, I'm joined today with Sal Tomaselli, our mortgage broker. Hi, Sal.
Hello, everyone. How are you? It's great to be here. Thanks, Eugene.
Absolutely, my pleasure. Happy Valentine's Day, by the way.
Thank you.
So today we're going to talk about market, what's happening in the market right now. We're going to share some data and some insights on what exactly is happening and how we can process this information. Let me start with sharing my screen, and I'll share with you what I found on the market as of today. So first, obviously, I want to talk about supply and demand. As far as supply goes, unfortunately, we don't have much good news. And the supply is still, if you look at this chart, number one, supply overall still low and even lower than the last year. It's minus 6.8% year over year. Monthly new supply here on this end almost unchanged year over year and more than the last month, but still I'm going to show you the chart overall supply, and you will see that this is still extremely low overall supply. As far as buyers' activity, two important criteria. It's a pending sales and days on market. Pending sales we see here, and we have pretty nice jump from the last year, 37.4% year over year. It shows that a lot of buyers out there started going out and look for homes and buying them. As far as days on the market, this is the criteria. You can see here 67 days. Why is this important? It shows how long the property stays on the market before it goes into contract. And 60 days, 67 days is well under normal standard time, which is approximately 90 days. And I went ahead and I checked the numbers on Brooklyn MLS. As of last month, approximately 34% of the properties even sold under 30 days. So that shows that market is extremely strong, even though there's higher prices and a very high interest rate. The last number I want to share with you is the prices. And as you can see here, number 4 and number 5, price per square foot and median sales price. The numbers are back to normal and back to normal appreciation year over year, approximately anywhere between 4% here and 6%. So we're going back to the pre-pandemic levels of appreciation, again, for anywhere between 4 to 6%, depending on the property and the area. Again, I wanted to point out very important to understand that the complexity of Brooklyn market. We have so many different areas, neighborhoods. We have so many different types of properties, and depending where you are, the numbers for your property could be different. So this is why it's extremely important to talk to your real estate professional to ask for the numbers that specific for your property, for your neighborhood, maybe even for your building. The last two charts I want to share with you are the charts for supply. And again, just to show you that overall number of number of active listings, unfortunately, is going down on this chart. It shows active listings overall for all residential listings. And this chart shows the number of new listings. And unfortunately, in both cases, we have inventory is decreasing. There's no hope in sight. Again, this is all from me as far as the numbers directly for the market. And my understanding, the way it looks to me is the balance between low supply and high interest rate keeps the market more or less in check. But because of such buyers activity, I would say the sellers have an upper hand in today's market, so they have priority in today's market. So this is why if you found yourself a good home, if you can afford it today, I don't see why would you wait in this market. So what about you? What would you like to tell us about?
Okay, so as you mentioned, it's
Yeah.
thanks, Eugene. As you mentioned, today's Valentine's Day, February 14th, 2024. So we had some interesting things happen in the market. This week, there was some economic news that caused the rates to tick up slightly. And any of our clients that have that subscribe to our mortgage market update, the weekly market update, would be getting that information. So I encourage all the listeners to subscribe to our mortgage market update. I'll share my screen right now and just kind of show people what it looks like. Essentially, we send out a market report on a weekly basis and kind of give people an indicator as to where everything's going. This week, what drove the market to deteriorate a little bit, and rates came up a little bit, was the consumer price index, which went up by, it was above expectations by 0.17%, which had a direct correlation in the marketplace, and the rates went up by 0.17%. So last week we were sitting with rates lower, and now if you see the 30-year fixed rate went up by 0.17%, which is what happened in the with the consumer price index. It's not always a direct correlation. In this particular week, it seems to have that's what has happened. But I encourage anyone that wants to stay informed. This is a great report, and it's something that we provide for free to our subscribers. And you can subscribe to it, and you can understand where the rates have gone, what changes have taken place. And back to your information that you just shared with us previously, it's an indicator that the market is strong, that the prices are not going down, and that's obviously good news for sellers, but it's also good news for buyers as well, because when you're about to make an investment, a home is typically the biggest investment that most people make in their lives, and it's an important one. And in our market here in the Brooklyn, New York, downstate New York market, it's a very strong market, and it's an indicator. Everything that you showed is an indicator that prices are stable, that inventory is low, which means that there's some competition for the properties that are out there. So it's good news for a seller, but it's also good news for a buyer, because the buyer knows that they're making an investment, and that investment is relatively safe and will more than likely not go down, and more than likely go up over time, which historically it's done. So it's not too exciting, it's not too volatile, but it's very stable, and that's the good news. I think that's the good takeaway from today's report. But I just reiterate, I encourage anyone who wants to stay informed as to the market, they could subscribe to our weekly market update. And once they do that, they can kind of have an idea as to what is going on in the marketplace, and they can do that on our website at betterloans.net. And back to you, Eugene. Thank you for having me on.
Absolutely. Thank you. Thank you very much, Sal. Listen, just one quick question. You're saying that the interest rate went up a little bit. Well, in my understanding, it's not a little bit. It's even about 10 days ago, it was approximately in the mid 60s. Now it's over 7. So do you think it's just a normal behavior of a part of the normal behavior of interest rate, or is it something bigger and maybe it's going up even more? It's coming soon.
Really good question. If you look at an interest rate chart and the direction of an interest rate chart, it doesn't just go. It's not in a straight line. You usually see these this variation that takes place. What we look at is trends over time, not particularly on, because you can
Big
drive
picture,
yourself,
big picture.
yeah, you could drive yourself crazy looking at it on a day-to-day basis and trying to figure out the market. What you
Okay.
really want to do is you want to look at overall trends. Where are we in the last month? Where are we in the last 6 months? Where are we in the last year? What is happening in the marketplace? And that's a better indicator. And the farther out you go, will give you an overall, like a 80,000-foot view of what's happening in the marketplace. To look at it on a week-to-week or a daily basis, it's very hard to see it because it's just so, so it's like micromanaging the rates.
Right.
I think, being somebody that's been in this industry for well over 30 years, and I've seen many upward moving markets and many downward moving markets, we're definitely trending downward.
Mhm.
The government has raised interest rates to reduce inflation because inflation was up around 9%, and now it's reduced significantly. And our target, the government's target is around 2%, and we're in
Mhm.
the threes right now. So we're definitely moving towards the 2% goal.
Mhm.
And just to put everything in perspective, the 2% goal is what we would call normal inflation. Okay.
Mhm.
Um, what we experienced in the last year and a half or 2 years was a very high inflation rate. It was approaching 10%, and I think we all felt that.
Yeah,
When we went to the
absolutely.
supermarket and we
Mhm.
filled up our cars with gas and everything, and now we're starting to see a reduction in that number. So I think overall we're moving in a positive direction, and that will be reflected in interest rates as well.
I got you. Okay, thank you so much. Okay, thank you very much, everybody, to join us today. All information that all the charts you can see, they're available for the download. All information for Sal and myself also attached to this video. Please like the video, subscribe to our channel. That way you will not gonna miss our next episode. And we'll see you next time. Thank you very much. Thank you, Sal. Bye.
Thanks, Eugene. Thank you, everyone. Happy Valentine's Day. Take care.
Bye.
Bye bye.
Bye.